But let's welcome on board our next speaker. We've got Amit Uplenchwar, who's the director at Kalpataru Projects International, joining in on the show right now to talk about how their business has been. Amit, good to have you on the show. Your results have been, have seen delayed collections, especially from the water segment, and higher interest rates as well. Tell me, how is this going to spill over in Q4, and is there any revival that you're anticipating?
So, hi, good morning, and same to all your viewers. You've been right. The water business has been an issue for all the companies that are operating under that segment. And whilst, we were no exception, this has just been a temporary shifting of revenue for the next quarters. Because of this election this year, there has been less spending on the allocation to states and state utilities from the government towards their water schemes. However, having said that, water contributes to 16% of my current order book, which stands, in excess of 60,000 crores. And water of that is 10,000 crores. So, it's not an operational metric that we are overtly worried about, because for the next year allocation, there is already a 66,000 plus incremental for states and allocation for water utilities across. And I think we're already seeing traction in terms of collections happening. I think YTD, we've already collected close to 250 crores from water utilities, and the trend continues. So Q4, let's see what we can do. We've got a month left, but I think for the next year, this is not a concern at all.
Okay. How much of the delay in your orders is a function of pure slowdown by the government at the state level or at the central level?
So, Nikunj, these are all state utilities funded by central water schemes. And this was the first 2 quarters that lagged because of the election. There was code of conduct applied across states. But having said that, if you look at KPIL as a whole, we've had, I think, one of the best Q3s so far. We've had on every metrics, be it revenue, be it PBT, be it EBITDA, be it PAT. We've had phenomenal growth, close to 12 to 20%, even across some of the parameters. If you look at 9 months also, we've had across on a standalone level, from revenue to PBT to EBITDA to PAT, we've had expansion across all parameters. And that signifies the robustness of our business. We've got enough order book for the next 2.5 years, even factoring growth of 15% year on year, which we've been doing for the last several years. Even this year, we had guided between 15 to 20% growth. And in spite of slowdown in the water business, we are at a console level in Q3, 16% growth in revenue. And on a 9-month basis, we are growing at 10%. And I think given the fact that, as you know, in our business, Q4 is always the most robust quarter in terms of growth, with all tailwinds, with the EPC contractors, I think we should end the year at, between 12 to 13% of revenue growth in spite of lower collections in water. Because all our other businesses, our T&D business is showing phenomenal growth. So is our oil and gas, and so is our building and factories division. I think our focus on balance sheet to keep the debt in check, keep our interest cost in check. Our interest cost for the year will be close to 2% of our revenue. Our debt to equity ratio is at 0.4 in spite of we doing capex and having growth in our business. We are one of the lowest in terms of leverage in our business across all parameters. If you see in terms of tech, we've got so much focus on execution excellence. We've got more than 30 startups working across all our disciplines, from tendering, be it commissioning, be it operation, maintenance, and production. We've got another 40 startups that we are talking to deploy across to give us that efficiency and edge. And I think our international subsidiaries are just a joy, right? Our Q3 numbers and 9-month numbers for our Swedish subsidiary, we've grown, in terms of order book over 100%, revenue over 100%. Profit is showing a very, very good, growth. So is our Brazil subsidiary. If you see, you spoke about PAT a little bit, except on the console at PAT level, we've had a little bit of a degrowth, but that is not an operational parameter, because if you look at Pastel, which is our subsidiary in Brazil, We've got our order book growing almost in triple digits. So is our revenue. We've had a Brazilian real which devalued against the dollar, but I think that's temporary. It's already showing signs of coming back. So I think overall, I think we are doing pretty well for 9 months of FY25.
All right, Amit, despite of focusing on improving your operational profitability, you're also focusing on value unlocking as well as some of your asset monetization plans for your non-core investments. But specifically on value unlocking, give us a sense that by when can we expect the IPO of your real estate arm? Is something is already in works, and any timeline you can share with us?
So, you're right. You've heard about the IPO. There's not much I can talk about because, as you know, that's a separate entity of the promoter group. And I think I would not be in the right place to answer that because I'm not aware of the timelines. However, from KPIL's monetization efforts, I can tell you that whilst our debt is pretty much in context of our business size today at an all-time low, our non-core road asset divestment program is on track. We had guided that we should be getting that wrapped up by the H2 of FY26, and I think we are on track to achieve that. So far as our other non-core investment of a project in Indore, we are just receiving OC shortly, and that investment should also get closed by recovering our investment. So I think we are on track for all the two that we had said that we will divest as non-core assets.
But are you feeling somewhere that this entire capex, which power and infra companies in a sense have relied heavily on because governments had started spending, there was the jugalbandi between state and government and order books were like really flowing. Has that cycle come to an end and there would be only incremental growth, no exponential growth now?
So, Nikunj, I mean, we had said that we will get close to 22 to 23,000 crores this year as our new order book inflow. And, YTD, we are almost at 20,000 plus crores, including 2,500 odd of L1s. I think we've already met the target by the end of the year. I think we should be able to achieve what we started out at the beginning of the year in spite of elections and some of the slowdowns. So to answer your question, I don't see a slowdown in capex in core areas of transmission and substation, both in India and overseas. It looks very, very robust. In fact, the next 4 years, because all the GENCOs have to supply electricity, as you know, in India under the NEP 2030, and also overseas, we don't see for the next 4 or 5 years a challenge, at least in the transmission and substation space. So far as BNF is concerned, which is our building and factory segment, we are doing all-time high numbers, be it order book, revenue, execution. We are creating new landmarks there. We've created almost a world record of 3.5-day slab cycle on one of our projects. We've got our metro segment. We now have 6 TBMs, which is a very large fleet. We already have 3 metro projects that are currently ongoing. There are more than 50 metro projects over the next 5 years that have already been on the drawing board. I don't see order book as a challenge, at least for us, given the fact that we are very well diversified both sectorally as well as geographically.
Appreciate your time. Thank you for joining us and good luck for coming quarters.
Thank you so much. Thank you.
All right. Aman Chauhan joined.